You're listening to the Real Estate Entrepreneur Podcast with Terrence Murphy, where we cover sales, investing, and entrepreneurship with an emphasis on real estate. Each podcast, Terrence and his guests will bring you informative and inspiring information within the real estate industry.
Tyler Chesler, CCIM, is a high-performance real estate entrepreneur who helps real estate investors transform their business and lives. A successful real estate investor with a background as a former perennial top-performing commercial real estate broker. Tyler started investing in multifamily real estate in 2015 as a way to build wealth and create diverse income streams for his family. Prior to launching his real estate investing firm, CF Capital, Tyler spent over 7 years in the business as a founding principal at a successful commercial real estate brokerage company, a real estate investor, professional speaker, and award-winning sales professional. Today, Tyler offers a range of services and programs from syndication of private passive investment opportunities, individual group business coaching, real estate consulting, keynote speaking, and a host of top 200 business podcasts internationally called Elevate Podcasts. Welcome him to the show today. You guys know I like to start off each episode with a quote or a scripture. So today is Romans 8:37. It says, "No, despite all these things, overwhelming victory is ours through Christ who loved us." So either way, guys, I want you guys to stay positive, be encouraged. But I have a friend who's killing the game in real estate syndication, multifamily, and podcasting. Tyler, thank you for coming on the show today, brother.
Terrence, my man, the first time I met you, I knew we were going to be great friends. And I'm so excited to be here with you. Thank you so much for having me.
Yeah, man. Thank you for being on the show. I mean, there's just that when you're in a room of hundreds and hundreds of investors, and I remember, I think it might have been Brad Sumrock who brought up you and your podcast, and I looked you up and I was like, this dude and I got a lot in common. I need to go out of my way to introduce myself. So, man, thank you so much, man, for what you're doing for just the real estate industry and this friendship that we're building together, bro.
Man, I appreciate you too. And even just leading off with a quote or a scripture in your podcast, I mean, it says a lot about you. And at the end of the day, man, this business is a people business, right? So how are we going to serve someone else? And I appreciate how you serve other people and you pour into other people. So if you're up for it today, Terrence, I'd love to pour into your audience and let's do that together. I think we'll make a lot of magic.
Man, let's do it, man. So tell me your story, bro. I mean, we all have a story and I like starting with that. That's just so important to me because I think, three things I always tell my team: you can build rapport through stats, facts, and stories, right? Especially when you're in the real estate. And so we all got a story. So tell me your story, and then how you got into real estate and how you got to the point where you're at today. And then we'll start backtracking and walking through that. But give me that in a couple minutes, bro.
For sure. And I do think I want to stack on the story piece because stories are really how we make sense of reality, right? If any of your listeners have ever read the book, The Story Brand by Donald Miller, they know it's an amazing book. If they have not read that book, I highly recommend it because if you want to continue to grow and impact other people, you've got to be able to connect, right? And that starts with story, and people connect with other people's stories because they align with that, right? They're the hero of their own story. And so in terms of my background, I actually started my career in the corporate world. I was actually working for a global restaurant company in a marketing capacity. I actually went to school for marketing, and I was always fascinated with consumer behavior and decision making, at scale from people and other people. And I always was just fascinated why people would give more value to a certain brand than others, right? Growing up, I played basketball and I was a huge fan of Nike. I never knew, why I loved Nike, but I thought Nike was the coolest thing on the planet. And so if I ever had Nike shorts, man, I was the coolest dude on my street, And if I had Nike shoes, I was even cooler. And so to me, marketing and branding was always fascinating. So I went into school for marketing to learn how to brand and to learn more about the psychology of business. And as I got started in my career in the corporate world, I learned that, it was really a lot about politics. If I wanted to grow, if I wanted to climb that corporate ladder, it was more so about my time in that position and perhaps, the way that I was pulling strings from a political perspective within the organization. So at first I started to look around and say, man, this is interesting. I have to put in more time in this position if I want to go to the next level. If I want to be in the corner office or the C-suite, I've just got to put in, a decade or two, and then perhaps I'll be there. And so I started to look around and I started to question that. And I'm like, wait a minute, that doesn't feel right. That doesn't feel right. And by the way, my background, I didn't grow up in a high class society. I grew up middle class. I never knew that I would become an entrepreneur. I never knew that I would step into real estate. But when I started to learn that political nature of the corporate world, I was like, man, this doesn't seem right. So I started to question. I started to ask questions. I started to be a little bit rebellious because I was like, man, I don't want to wait. Why do I have to wait? What if I'm more effective? What if I'm better at what I do? What if I create more results? And that wasn't the name of the game. And so I started to look around and say, all right, well, what else is out there? The first thing I did was like, all right, I'm going to get my resume ready, because I didn't realize the problem that I was trying to solve would not be solved by just getting my resume ready and going to another organization, because it was going to be the same thing. And so what happened was, long story short, I started to ask other people, started to ask questions, and I came upon real estate. And I learned, after I'd bought a home a few years before that real estate could be an option. I could start to sell real estate. The funny thing about it was, when I heard the words real estate, the brand in my mind was residential single family houses, right? That was all I knew about real estate. And so I went out and got my real estate license, and I started selling houses on the side. And this was in 2013. Within 6 months, I doubled my income, and I said, wow, this is interesting. So I made a leap, and I said, I'm going to do this full time. But as I made that leap, I learned that commercial real estate was a thing too. I learned that income producing real estate was an option for me to sell. As I got more and more familiar in that world, I became a commercial real estate broker, built a ton of success in that space just by one deal after another. And it was a referral and repeat business based, operation. As I continued to grow that, I started to learn about lifestyle. I learned about, how the wealthy make decisions on money. And I learned from Rich Dad, Poor Dad and Robert Kiyosaki how wealthy people think and how they approach, assets and liabilities. And so I'm like, wait a minute, I'm selling these properties. Why don't I start buying them too? So I started investing in multifamily real estate, because that was my niche. That was what I focused on. And I continued to grow and scale that business, because I learned the power of scale and learned the power of passive income and multiple streams of revenue and income. And so I've just continued to compound that over the years. But, it's become about who I've become as a result of this process, because, man, it was harder to go the entrepreneurial route. It was harder. It still is harder than to be an employee. It's more challenging. You're on the front lines of emotions, right? It's ups and downs and all these things. But I've transformed as an individual. I've become this person that I didn't know exist before this transformation and before this experience. So that's been almost one of the most beautiful things. But every day is a new adventure. Every day is a new challenge. But it's all about, personality. It's all about relationships. It's all about growing, and it's all about challenging yourself to take that next step. So that's really been my story from a very high level, Terrence.
Man, that's cool, bro. Well, it's crazy because we already knew we had a lot in common, but even in that, starting off, I saw the power of real estate and making that transition as a broker to, hey, dude, I need to be investing. And so, yeah, that's pretty cool, man. So obviously people always want to know numbers, and you said a couple things in there that I want to dive into. And one of the things I always talk about is multiple income streams. And I think in multiple income streams, you create that where you have freedom. And so I'm going to ask you some questions, and I really want to dive into it. What do you feel like, when you were in the commercial space, was it because you were a broker of multifamily, or is it something you were more interested in, more passionate about? Why did you choose multifamily over industrial, RV parks, commercial strip centers? Let's talk about that.
Yeah, absolutely. So when I got involved in commercial real estate, I was selling mostly multifamily. So I actually kind of stumbled into it. I was also selling office and retail and raw land. But the most traction I got was on multifamily. And those are the most deals I got. And I actually became known as the apartment guy in my market. And people would come to me from all over the country to do deals with me. And, I was doing deals off market, on market, and so on and so forth. And so I actually built this network and this kind of off market knowledge of all the deals. So I knew all the players. And as you know, Terrence, it's an 80-20 rule. Like the 80-20 rule is highly appropriate in this segment and in all segments of commercial real estate. But 80% of the deals are being done by 20% of the people. And so I knew all the players, and I developed, deep relationships with all the players. And so as I got more and more familiar, what I recognized was that the risk and reward of multifamily was something that I wanted to take advantage of as an investor as well, because everybody needs a place to live, right? When times are tough, people still need a place to live, and they need food, they need water, and they need shelter. And I found an opportunity to maximize what I learned in commercial real estate, which is to add value to property by increasing net operating income. And so what I can do is I can go in and add value to our residents by improving their unit, improving their experience, improving, the overall feel of the community, whether it's physically or operationally. And I was able to do that while increasing value, but also minimizing my risk, because at the end of the day, it's not a luxury. Like, shelter is not a luxury. It's like something that human beings have to have.
It's essential, if there's ever a word.
Right. Essential. It's an essential business.
Yeah. So, I want to go backwards, because you said something that I really like to kind of dive deep in some of these wisdom nuggets. And you said it, and like you said, when you've walked through the journey, you can kind of glaze over it. But you said, I went and found those players, right? You went and found the people that were making the moves. And I think as people listen to these podcasts, they read these books, they watch YouTube videos, and then they just think they're just going to just jump off their couch and it's going to happen. Like, you don't just get to doing multi-million-dollar apartment complexes. There's steps, there's progressions, and there's things that you got to do to sacrifice in order to get there. So one of them is finding out who the players are. What did you do to go about doing that? Like, I want to talk about that.
Yeah, that is such a good point. And by the way, Terrence, like, you are a player, right? You are a player. And this is a game. At the end of the day, it is a game. And so I think it's important for us to note, like, there are players and there are key points of leverage. There are centers of influence. And so as it's almost like, looking back, it's easy to say, well, you just find them, right? You just find them and you get in a conversation, you build relationships. But if I were to really look back, for me, it was, I stumbled into relationships, or I stumbled into things, and I started to uncover, wow, this is a player. This is someone who's doing more and more and more deals across the marketplace. But what I was able to do, and actually for me, it was all about the mentality that I had as I was growing my brokerage business was one deal at a time. What can I do to service one person at a time? And, remind them that, hey, by the way, if you do this again, I'd love to add value to you. I'd love to be an advisor for you. I'd love to help you make better decisions, to identify more and better opportunities. And so with that mentality and that long-term relationship mentality, that served me well, because while I didn't know truly who the players were as a green, kind of wet behind the ears, new individual, new player in the market myself, that service mentality allowed me to develop relationships with people. It's like, I just treated everybody like they were a player. I treated everybody like they were, the big dog, or the whale in the market. And so with that, when I did encounter those individuals, they appreciated that. They valued that. And so as I got more and more familiar with who really was doing the deals, that really served me, because looking back, there was times where it's like, man, I didn't expect that this individual was a significant player in the market. But because I treated everybody the same way, that paid off. Does that make sense, Terrence?
Oh, it makes a lot of sense. It makes a lot of sense. And that's the point I wanted you to make. Like, first off, treat everybody the same. And then secondly, we have a lot of the same sayings, but I call it one brick at a time.
Yes.
Anytime you're building something, whether, and the one brick mentality is something that I always say is, you got to stack that brick first, and you got to be very strategic of how you do it. And in that moment, when I'm putting that one brick down, that's all that matters. And you just do it one brick at a time. And before you know it, you've built a whole house or a whole wall or whatever you're doing, right? You built it from that one brick, because that brick is really the cornerstone. So like you said, those relationships started off there, and then they just kind of blossom, because people talk like, hey man, Tyler, man, that dude right there, he's sharp. He knows his stuff. You ought to give him a shout, right? And then once you get, I tell people it's the snowball mentality. Like, just, you got to grind in the beginning to get the snowball up the hill. But if you can just stay with it, it will come down the other side of the hill. And when it does, it creates so much momentum for us. So in the multifamily space, you what was your first deal that you did personally as an investor? Let's walk through that, because you always remember that first deal.
Oh my God, man. This one, I will never forget. This first deal. It was 8 units. And man, I thought I was like Robert Kiyosaki too. You know what I mean? Like, I read Rich Dad Poor Dad. And I'm like, man, I got 8 units. I got multiple streams of income, all these units, man, this is crazy. I'm scaling up and all this stuff. And man, I tell you what, I made a lot of mistakes, It was I thought it was a value add deal, but I'll tell you what, it was a distressed deal. It was a deal that, it needed a lot more work than I realized. It was very mismanaged for probably multiple decades, not only physically, but operationally. And, I bought the property and it had 8 units. Plus it also had a garage that I actually was able to add value to and create a new stream of revenue as I exited the property a few years later. But, multiple of the units were non-performing. I mean, you had tenants not paying rent. I did not read that in Rich Dad Poor Dad. I didn't know that tenants didn't pay rent because I was always the perspective that, man, if people have a lease, like that's what they have to do, right? But man, I learned a lot. It was almost like street smarts. I had to understand that what you read in a book doesn't always manifest itself in reality. And so that was a big learning lesson. But man, there's so many different learning lessons that I gained from that experience. But that was my first deal. It was an 8-unit property.
Sweet. So yeah, that makes sense. And you said something so value add, and people throw around these things, and we're gonna dive deeper because I always say my audience, there's really high level investors that are listening, but then there's people that are on the fence and ready to start. And so anytime like you and I throw out cap rates and IRRs and things like that, we just say it loosely, right? But you said value add versus distressed. I want to dive into that. Like, what would you say the difference is in a value add property and a distressed property? Because they're the key word distressed. There's a lot more stress that comes with this one versus this one. What's the difference?
So we can get either technical by the bank's definition, or we can get technical based on our definition, right? If a bank is looking at a property and they say, all right, well, if you've got a vacancy of over 10%, that's considered distress, right? Yep. And in multifamily, that's how banks or lenders look at properties. Is like, if you're above, 90% occupancy, you're stabilized, and perhaps there's value to be added on this asset. But if you're below that number, you're in distress. And so what this particular property was distress is because, man, half of the units were non-performing. I did not realize that this owner perhaps what I call loaded the rent roll. I mean, he had folks in these units and the rent roll looked like, yeah, man, we got nice cash flow here and there's upside. They were paying around $500 a month. And I was like, man, this market would support up to $800 a month. So there's value to be added, right? I can go in here and over time, I can improve these units whenever, their lease expires. I can either negotiate with them, or if they move out, I can go in and improve their unit and achieve that upside that the market is providing. So that's what a value add property is if you have a stabilized property that's producing consistent cash flow, but it's not meeting where the market is. And there's a gap from an improvement, whether it's physically or operationally. And so, that's something to realize is that on paper, sometimes you can look at a deal and it looks like it's stabilized and there is some value to be added. But if you don't truly understand that there are risks, there are things that you can't see, until you really dig deeper and conduct a thorough due diligence. But that's really from a high level what the difference between distress and value add is.
No, I love it. Yeah, because I think when people jump on these different podcasts, different YouTube, they're reading these books, they don't feel comfortable asking these questions. So when I bring people on like yourself, and we could just take off and just leave people behind, and because we'll be talking so high level and just be running 100 miles an hour. But one of the things you hear in this realm of conversation before we move on is CapEx, right? CapEx. What is CapEx? I don't know, right? I mean, obviously I do, but I don't know. What is CapEx? Like, how would you define what CapEx means in the multifamily space?
Yeah, absolutely. So obviously, it's short for capital expenditure, right? So what that means essentially is an improvement in the property that is non-reoccurring. So as an example, if you're going to put a new roof on a property, you're not going to do that every single year, right? That's a capital expenditure. That's a capital improvement of the asset. And if you want to get super technical, an accountant or a CPA is going to depreciate that expenditure over a certain period of time of the life cycle that's expected of that improvement. So that's one example. Another improvement that would be an example of a capital expenditure would be, improving the plumbing or improving the electric or the heating and cooling or even windows. Maybe you're building a new deck on the property. Maybe you're redoing the parking lot. So those are capital expenditures. These are things that don't necessarily occur every year, because there's a difference in a capital expenditure and an operating expense. An operating expense is going to be landscaping, turnover, unit maintenance, right? You have,
Yeah, it's happening year over year.
right.
Yeah.
Those are things that, those are direct write-offs to your income. And they happen every single year, and it's just a cost of doing business. But a capital expenditure is improving that asset that really, it doesn't occur every single year, but it's also a vast change from where the property is now and really over the life cycle of that deal.
Love it. Great explanation. So you said it earlier, like loaded rent rolls. People don't know what that is. And it's like, and one of the things I always tell my team, the Ronald Reagan quote, trust but verify. So
True.
We see it on the OM, we see it on the spreadsheet, rent roll, but we got to dig into these leases. Like we got to verify these things. And when you get into those, bigger unit counts, how do you and your team go in and follow that model? Like, how are you really verifying that it is what it says it is?
Yeah, I mean, we actually dig into tenant ledgers. So we want to see the history of each unit. So like if we're buying a 200 unit property, we want to see, all right, so how long have these 200 tenants been on site? Have they lived here for less than a year, or they lived here for 3 to 5 years? And what's their payment history been like? What's the delinquency look like? And what are the tenant files? I mean, believe it or not, man, we dig through these files. And if there's nothing existing, we're going to question that. What's going on with this tenant? Why are the files not here? And we may have to consider, if we don't have all that information, we almost assume the worst. It's almost like playing blackjack, right? When you play with the dealer, it's like, I assume that they have a king that's not being hidden. I assume that they have a 10. So how am I going to act based on that assumption? And that almost limits our risk and liability based on that assumption. It's not hoping that the negative occurs, but it's also not, shielding our eyes and putting our head under the blankets and hoping that something bad doesn't happen. So, that's how we really deal with it, is really digging through, a tenant file audit. I mean, that's what we really do to understand what's the true nature of this income stream.
Yeah, you got to meet it head on for sure. Because the thing about real estate is problems will not solve themselves. Like you got to go meet it head on. So as we progress, right, you bought an 8-unit building. Man, you really start gaining traction. When did you decide to start raising capital, and why?
I'll tell you what, man. So the second deal I did was 36 units. I learned through that obviously I didn't make the mistakes that I made on the first deal. I actually did really well in the second deal. And I learned that, man, there's definitely something to be said about scale. And that was larger scale than my first deal. But after that, what I started to do is I started to recognize that bigger deals, not only you could put a team on the field, right? You can, because whether you have 36 units, whether you have 8, whether you have 136, 236, these properties require constant attention, right? Especially multifamily. They're very highly management intensive. And so what I recognize is that with scale, you can support an on-site team, right? You can support an on-site staff, whether it's maintenance, leasing, management in general. And so when I recognized that, I said, all right, how do I get in that space? Because I was selling larger properties. And I was saying, all right, well, what can I do? What can I do to get in that space? The first thing I did was I started to invest passively. I started to invest passively in larger deals to understand the mechanics, to understand the reality of the operation, and to really get an inside look. And so, I built relationships with folks across the country. And again, we're talking about players, right? We're talking about players, people who are doing deals, people that I trusted. And I started investing with them. And I started to observe and learn and enjoy cash flow and enjoy the tax benefits of passive investing. And so with that said, what I recognize is that not only is this a benefit for this person who's putting this deal together, but it's a benefit for me as well. And so it's an abundance mentality. And so what I said was, all right, if the name of the game is scale, then instead of being selfish, instead of playing small, what I can do is I can offer opportunities to others. We can scale, we can provide cash flow, we can provide upside, we can provide an awesome experience for residents and tenants and our employees by having an abundance mentality. And so that's really, the decision is like, look, man, if the name of the game is scale, and if playing small is selfish, then let's go big. And that was the decision behind really continuing to expand in the space.
Man, that's good, man. Yeah, the first time I heard that is a friend of mine who just happens to be a billionaire. He's done well. But he said he challenges me all the time, and he's told me because we have been doing different acquisitions, and for the last 15 years, my wife and I have been buying neighborhoods and doing single family or whatever, multifamily, commercial, but we never raised the capital. And one day he said, "Dude, you're being selfish." I had never heard that perspective. Because I'm like, what do you mean, man? Like, I don't want to, being in the NFL, when you're in the NFL, everybody's calling you, asking you for stuff, people asking you, and they just assume that everybody's got Tom Brady money, which we don't. But it just kind of was a burden, and I never wanted to be that for people in my life. So I was like, I just won't raise any money. I don't want to bother anybody. But it was that perspective you just said. And he brought it to me. He said, dude, he said, look at the track record you have and look what you've done. By you not letting people like Tyler and this person and that person that are friends of yours invest in your projects, you're being selfish. So you hit it on the head, bro.
That'll change your minds big time.
Yeah. So you start syndicating. If I were going to syndicate, because that's been a question that's been coming in, like, where do I get started? And I always really try to go to the foundational things because we can jump to high level stuff, talking about 200 unit buildings. But really for my audience, I always like to try to give them a roadmap or leave some breadcrumbs for them to say, where would I get started? So if I wanted to syndicate and I'm listening to this podcast and I was able to get to Tyler, how would I be able to get started in syndication or in sponsorship or co-GP? There's so many different names for it.
Yeah. Well, the great thing about being an entrepreneur is that there's no one size fits all, right? We can all have a different path in how we approach this, and it can still work out. I mean, for me, the path that made sense for me was and I didn't know this as I was doing it, but looking back, the dots are connecting in many ways, but it was to use my own money and to go out and buy a deal. I created income through the brokerage business, which then I said, look, let's put this to work and let's buy. And what I did was I learned, and man, I made a ton of mistakes, as I mentioned. I mean, I could have gone on and on and on about all the mistakes I made. And I continue to make mistakes, but less mistakes each time. And so as I continued to grow, I said, all right, well, let me go ahead and try to learn more about, larger deals by passively investing. So that was a great way for me to get a vantage point and to learn more and to ask questions and to see the reality of these deals. And then for me, then it was about building more relationships, and it was about setting an intention to say, look, this is what I want to do. And now who do I need to know to be able to do that? Because sometimes we can get overwhelmed with the how, right? We can say,
Yep.
Well, how am I going to do this? How am I going to find the deals? How am I going to raise the capital? But the real question is who is going to help me do this? Who can I leverage together and offer more value to them? Who can I gain, experience with, right? Or who can help me get to that point? So it does come with partnering up. I mean, one of the things that I've learned is that partners can be one of the most valuable things in this business. And so, for me, that's one thing that I would recommend is for folks to get educated. You start with education, right? You start with education. And by the way, that never ends, right? Continue to learn, never stop learning, and be open to learning. Ask those questions, but also surround yourself with the people who are doing it and ask them questions. Who would you recommend else that I know? Who would you recommend that I get into conversations with? And let people know, what are you looking to accomplish? And you can continue to stack. It's like that one brick at a time. I think it's one relationship at a time, one piece of learning at a time. And with that intention, with the outcome that you're focused on, you can continue to stack one brick on top of each other. But does that make sense, Terrence?
No, it's perfect, bro. Yeah, like you said, you're building it one at a time. And so not even getting granular, it just starts with, like you said, the relationships. And you said it earlier, invest in a couple multifamily projects as a limited partner. Just start there first, and really try to ask the questions and get the right partner, because, some deals you invest in a capital investment company, they won't even, you're in and you don't really hear from them. You find those relationships that you can invest in, and then you're really being mentored but having your money at work at the same time.
Yeah. And I would just add to that, I think if anybody wants to learn as a passive investor, tell that operator that your intention is not only for the return on investment, but it's to learn. And you want to get an inside look. Is there any meetings that I can be a part of and just be a fly on the wall? I won't get in the way, but I'm really here to learn. And if you tell someone that, for the most part, partners, operating, sponsors are going to say, absolutely. And if they don't, then go find someone else, so I think that's really important.
Yeah, that's good. That's good. Well, and you said it earlier, I always say this and I'll say it again. There are no losses. There's only lessons. It's only a loss if you quit. So if you would have quit after that first 8-unit building, then that would have been a loss. Because look at what you're achieving and doing and the impact that you're making now. And that's just where we got to have that perseverance and that faith to just keep pushing through and not be perfectionists, because you're going to mess up no matter what. And I think it's Albert Einstein quote, like, the people who've never made a mistake never tried anything new.
Mm.
And it's like, yeah, you're not going to make mistakes if you don't try anything new. You're just going to be complacent and stagnant, and good luck with that. But just keep pushing forward, man. That's awesome, bro. So I want to talk about mindset. I think that's an important pillar in your life. Where do you tie that in as a real estate entrepreneur? And why is that so important for you and the success and the things that you're doing?
So mindset for me is really the underlying factor of everything, right? If I'm going to sit here and have this conversation with you, my mind could be telling me, I'm not qualified to have this conversation. I don't know enough to really educate someone else. Or, what if you say something wrong? Or what if you misspeak? And, what will people think of you then? Right. So my mindset, or all of our mindset, is constantly, at the forefront of how we act. And so for me, it's really important to gain consciousness of the unconscious and understand that my belief system is driving my emotions, which drives my actions, which drives my habits, which drives my results. And so I have to understand and gain consciousness of what do I believe is true. And am I identifying with an empowering or a negative belief system? Is my beliefs, are they telling me that I can't do something, or are they telling me that if I try, I might succeed? And if I try, even if I don't succeed, I might learn. As you mentioned, there are no losses, there are only lessons. To me, that is a belief and a foundational thought behind developing an empowering belief system, right? And so my mindset continues to be an extremely, and almost maybe the most important component of my success. And my success is not always linear, and most of the time it's not linear, right? But it's always the belief and the understanding that I will continue to learn. And sometimes learning is even more valuable than money, right? Learning can compound in ways that I could have never appreciated or understood. And so for me, it's about understanding, that I can actually be conscious and develop my beliefs. I can be conscious and develop an empowering mindset that allows me to take action. And so it comes down to that. And really, like, at any moment, we're feeling a certain way. Like if you meet somebody new, Terrence, and you know this better than anybody, if you meet someone new, maybe you're like, man, I didn't really love that person, or I really love that person. At times, what we have to be conscious of is, hey, there might be some affect at play here, right? How do we actually feel? What's going on beneath the surface? And so I think connecting with some awareness, and to me, it's a practice, right? It's about not only mindfulness, but also an understanding of, hey, how do human beings think, right? Where has evolution brought us from, thousands or even millions of years? And so what's at play here? And so disconnecting from that negative thought, because we all have saboteurs, right? We all have these voices in our head that says, if I try, I might fail. Or if I do this, it might be embarrassing. Or what might people think about me? And so looking at that and saying, hey, thank you so much for trying to protect me. But guess what? I don't need that, right? I don't need that to succeed. I can actually go and step forward with courage and with faith, with inspiration. And so mindset is always running in the background in every decision. If I'm looking at a new deal, my amygdala might say, hey, you know what? If you do this, you could lose a lot of money. And this could be really scary. Then what might happen? You get this negative spiral and you start to make decisions based on a contraction rather than an expansion. And so for me, I want to be in an expansion mindset. I want to be moving forward rather than retreating, because all of my dreams are on the other side of fear. And so how do I act in the face of fear? And I don't do it in a fearless capacity, but I do it because of fear, because fear is a calling card that I'm stepping closer to my dreams. And so mindset to me is everything. And that's really why.
Wow, bro. Some nuggets in there. Contraction versus expansion. Dreams on the other side of fear. I mean, that's some good stuff, bro. And I think, because I tell people, then it wouldn't be called faith, right? If we could just decide what we want to do every day, day in and day out, and just write out our life, then why do we need to have faith? The whole purpose of faith is to step out of the boat and try to walk on water.
Ooh.
Right. And if you're not ready to do that, then be like the other disciples and stay in the boat. But if you are, just know that you're going to have that faith. And so that's important, man. Wow. That's good, man. We can end it on that right there, but I want to keep going. Yeah. So real quick, multiple income streams is something you bring up. Why is that important? And where do you try to diversify what you're investing in? Let's talk about those two things.
Love that. Love that. So if you only have one option, you have none, right?
Yep.
So I think that's the most important thing. And again, going back to the earlier part of our conversation, it's one brick at a time. And so it's not like you step into this and it's like all of a sudden multiple income streams, right? So let's focus in one direction at a time and let's build that. Let's perfect that. Let's course correct. Let's make improvements. And then, once that system is in a place of supporting itself, or you have a plan and you have a strategy, now let's bring another brick and put that in place in terms of those multiple streams of income. So for me in real estate, the way that I've diversified my multiple streams of income has been, through multifamily, and that's my specialty. That's what I focus on. That's what I focus on. And those multiple streams of revenue for me are active, they're passive, and they're also from a syndication perspective, right? I syndicate larger deals, and I also still invest passively with other people. I still buy properties on my own or with one or two other partners. So for me, that's the diversification. Of course, we could talk about, all these other things to invest in, but my expertise is in real estate, and that's how I diversify. I have other people, who I really respect, like yourself, Terrence, who invest in multiple different asset classes within real estate or even commercial real estate. And so I think that's a great approach as well. And I think it's something that I will continue to expand into. And I think at the end of the day, as long as you can evaluate and truly understand that risk and have contingency plans in place for different asset classes, then that's a great approach to take as well. And so for me, that's how I look at it. And it's continually, hey, let's put another brick in place. And it's not from a place of being selfish or saying, how can I bring all the resources to me so that I can hoard them? It's in a position of abundance so that I can give, so that I can be more, so that I can spend time with you and have a conversation like this. And hopefully one person can listen to this conversation and say, wow, I'm really opening myself up for new opportunities. So what this allows me to do is this allows me to spend time with people. It allows me to give to other people. It allows me to live a more abundant life, experience the world, experience, different cultures and different people without feeling like, how am I going to create, practicality in my life? So that's what it's all about for me.
Love it, bro. Yeah, you said it earlier, building the one brick mentality. And like I tell people, I started off as a limited partner when I was 23 years old, investing in a capital company, actually Stillwater Capital. They're one of the biggest capital guys or groups in Dallas now. And 2006, 7, and 8, I was one of their first limited partners. And then in 08, my wife and I said, what, let's take some of our cash and let's go buy these, do it on our own. And so we started doing single family duplexes, urban development, scrape, new builds, whatever. We didn't buy our first commercial strip center, the Starbucks, Buffalo Wild Wings, AT&T type stuff until 2018. So it goes back to I just want to leave this out here for everybody. Don't try to compete with Tyler. Don't try to compete with Terrence. Compete with yourself. Like, we all have our own race. Stay in your lane, stay on your own journey. And I think that's when people tend to have those emotions that come up of jealousy or envy. Well, because you're looking at everybody else's race, and on social media, you're only seeing their highlight reels. No one's gonna post every week that they lost 10 deals or lost $10,000. They're only gonna talk about the one deal they did. So I just want to encourage everybody, like, be inspired by what Tyler's talking about, but don't compete with him. Like, learn from him, grow from what he's saying, but then just run your race. So that's something I wanted to put out there. So what's one lesson you wish you would have known when you got into real estate? Like, that you I wish I would have known this when I got into this industry.
That's a really good one. I mean, for me, and first of all, let me just comment too on what you just said, and I'll go back to this, but don't compete, create, right? The greatest players in this business and in life, and in my opinion, are those who they don't compete, but they create opportunities, but they also if they're going to have a competition, they compete with themselves. And it's not about, perfection, but it's about progress. How can I beat myself from yesterday? And maybe if I don't, not every day is perfect, right? So let's get back on track the day after that. And it is about how you invest in yourself. It is about how you grow as an individual, because, what got you here isn't going to get you there. So how are you going to transform? Because what's going to require you to go to that next level is about that transformation. It is about who you become as a process, as a part of this process. And so what would I wish I would have known getting into this business? I think from a really foundational level, it's that humility is required for growth. And so what that comes down to is asking questions, right? It's being willing to show other people that you don't know every answer. And Terrence, you probably have seen this yourself, surrounding yourself with some of the greatest investors or even practitioners or professionals in real estate. These people ask more questions than some of the most beginner people. And they show that they don't know everything. And it is amazing. But when I got started in this business, man, I was so worried and concerned that other people would see that I didn't know what I was doing. And I didn't want anyone to realize that I was a beginner. So I wish that I would have understood that humility and asking more questions and being willing to show that you are a beginner, because look, we're always a beginner. Like that never stop learning mentality is what serves the greatest players in this business.
Wow, that's good, bro. Man, we got a lot in common. We got the ball heads. We got it all going. But
right.
So here's another saying I have: progression, not perfection. You just said it, but in a different way. And then earlier you said something, this one of my quotes, I always say, a man with options is a man with power. So by creating multiple income streams, you have the options, which creates power in your life to go to your daughter's recital and not be 2 hours late or whatever it is. So man, that's good, man. And I always say the next thing you said is questions. If I'm doing all the talking in the room, I'm not learning anything.
Right.
And no matter what track record of success you've done, whether it's $1 billion in sales or this, that, and that, people are always blown away because I ask a lot of questions. And I can tell at times they look at me like, dude, I know you know the answer, but I'm asking anyway because I want to know what their perspective is. And so I love going into the room, and that to me is like a childlike spirit that the Bible talks about. Childlike faith, but having a childlike spirit where you're continually wanting to evolve. And that's just something that I try to always stay on top of, because like you said, pride and ego comes in, but then you're not growing, you're not getting better, and you can't get better if you're doing all the talking.
Dude, I got to give you a shout out too, because when the first time you and I met, man, your level of presence and your level of humility is palpable. And I think that is a pattern that I've observed between the people that I admire most are the people that can be present with you and can truly ask questions and truly show interest because of the desire to learn, but also the desire to put someone ahead of themselves and to truly give to someone else and give someone the opportunity of sharing their expertise and recognizing that there's always something to learn, man, is amazing. But Terrence, you do a great job of that, and you make people feel important by that, but you also learn too. So there's it's like everyone wins, man.
It's a win-win. It's a win-win. Thank you for saying that, bro. Yeah. And it's just, I think at this time, like I even remember when I was playing football, and then, at that point I was one of the top college football players in the nation, top draft pick, get drafted, Aaron Rodgers, myself. And people would always approach us because we hung out a lot and just thought, after they would talk to us for 5 minutes, they're like, we just expected something different. And it's like, well, what did you expect? And I tell people all the time, like at the end of the day, none of this is going with me. I'm just a steward. My gifts, my whatever I've done, I'm just trying to inspire people and leave a legacy through my children and through the people that have interacted with me at some point in time. And so whatever that is, I just want to always keep that mentality, because I know if no one else knows, top draft pick, get injured my rookie year, I get paralyzed, it could be over like that. And so that's where it keeps me grounded, and my mom, she was hard on me. So she really enforced that into my mentality. But yeah, man, I got a couple more questions, bro, if you don't mind.
Not at all, man.
What do you see as the biggest opportunity in real estate in the next 12 to 24 months?
Ooh, well, I'll tell you what, man, when you look across the landscape, I mean, the biggest news that everybody has to pay attention to is what's happening with the Fed, right? You've got money and liquidity coming in droves that we've never seen before, right? You had almost $2 trillion plus, inserted into this economy. So what's happening, right? What's happening? And if you have any just economic logic, you've got to recognize that inflation will be, a key component to our future and our near future, perhaps. Who knows? I mean, this is definitely uncharted waters. But if you think about it, and you're already starting to see it in not only commodities, you look at lumber pricing, obviously increasing 200%. You look at other pricing and labor and all these different things, I mean, skyrocketing in many capacities. You also see asset prices inflating as well because liquidity is what's going on. I mean, a lot of cash in the market. And so people are
Yeah.
chasing yield because yield is very, very challenging. And so for me, I think the biggest thing is, let's recognize that that is the case. Let's also recognize that maybe sometimes the contrarian viewpoint is important, right? If you
Yeah.
think about some of the most wise investors over the past 100 years, I mean, one of the individuals that I love to study just his philosophy is Warren Buffett. And what he says is be greedy when others are fearful and fearful when others are greedy. And so,
Yep.
we look across the landscape and, there are certain markets, there are certain asset types or asset classes that are, highly, highly in demand for great reasons, right? And there are other assets and other markets that are maybe not on the front page of some of these, investing media outlets, or so to speak. And so, how can you be greedy when others are fearful and fearful when others are greedy? And of course, we don't want to be greedy at all, but you understand the concept. It's
Yep.
important to look where others are not looking. And so, one of the things that we do and we have done recently is we look at markets that are not on the front page, right? And we also look at, the demographics, we look at growth, we look at job growth, we look at population growth and stability that can still make sense and can still allow us to grow our portfolio and to grow value of properties. But for me, I think that's one of the biggest opportunities is just to be open-minded. And, the other thing too, I just think that it's important for folks to continue to learn. And, while we go through this experience of, in uncharted waters in this economy, it's observe, it's be patient, and it's act aggressively when that opportunity strikes. So I know it's a really general way to respond to your question, but that's kind of what I'm seeing right now, Terrence.
No, that's great. And I know we really dove into some really mindset stuff. And I know my listeners always love numbers, right? So where are you at from a number standpoint? There's so many different ways and people push it around, but how would you, if you said, hey, here's where I'm at in my business, is it in sales that you keep up with? Is it in unit count? Is it in AUM? Like when you just need to take a quick overview of your scorecard of who you are and what you're doing as an entrepreneur, what does that look like? Where are your numbers?
Yeah, well, I got involved in the business in 2013 as an agent, then built a brokerage company, and have since pivoted to focusing completely on investing. And I also coach real estate investors across the country as well. And so as I was growing my brokerage company, of course, I'm looking at sales, I'm looking at annual sales. And as I was investing individually, I'm looking at, cash flow. I'm looking at, that across the board. And, I guess the way that we measure sort of our investing life in multifamily is sometimes we look at units, right? And so, I'm involved in over 500 units now and
Awesome.
growing, and we're continuing to grow that. But, we have a desire for where we're looking to go. But at the same time, no deal is better than a bad deal. That is my
Yep.
philosophy. So it's not about just growing that unit count at all costs. It's about buying deals that have a risk reward balance, right? And so for us, we're going to have a healthy growth over the next few years. We're going to continue to grow. We're going to continue to provide opportunities and, offering, tax advantaged real estate investment opportunities. But at the same time, we're not just going to buy any deal. So that's where we're at right now.
No, I love it. Jeff Bezos, I was watching the interview. He says, him and Warren Buffett, there's two interviews they had that I've really just been digesting. And what he said is, if I can make one big decision a quarter that can change the dynamics of not only the global economy, but his company, Amazon, then he said, that's all I need to do. And I remember there was a time where when, you become a real estate entrepreneur and you think busy, 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 go, 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 go. And what I've learned is one of the things that I've been talking to my wife about in my team is how do I get to a place where my sophistication conversations, so the level of my conversations are more sophisticated. So when it's time for me to make a decision, that I can make a really high level decision instead of making 100 million a week, or let's say 100 decisions a week, I make one big decision every 2 weeks that changes the dynamics and And so in our multifamily kind of thought process, our goal is to do 3 deals a year, and it's like you said, instead of doing a bad deal, I'd rather do no deal. So when I tell people, when I bought my first commercial deal, I had been researching for 16 months before we drew up an LOI. And it's like, you got to get to a place where you enjoy the process of that. And it's like being an athlete, right? Like, you only get to play 10, 11 games in football, but can you imagine how many practices, how many times we got to go out there in the heat just to play one game? But I've translated that mindset to real estate. Go look at 100 deals before you make an offer on one. And that's the part that's so important, man.
Man, practice like you play, right? When you're looking at deals, visualize the fact that you will be buying that deal at some point, right? But understand the dynamics, right? Because the more repetition you have, the more expertise you will gain. So repetition to me is the mother of all skill. So what can you do to look at more and more deals? And even as you grow and even as you begin to gain traction in your business, it still is going to be about repetition, because most deals are not going to make sense, right? 80% of the deals, or even more. I mean, in our business, 95% plus of deals that we look at do not make sense, but it's never a waste of time, because we gain market intel, we gain repetition, we improve our systems. And we also know that the more deals we look at, the closer we're going to be to one that makes sense.
Sweet, bro. I got a couple more questions. So real quick, like you said, what deal makes sense out of that 5 to 7, less than 10%? If you had a high level perspective, not diving into the leases and the ledgers and the entity and the whatever, loan, whatever, there's so much due diligence. When you talk about cap rate, internal rate of return, equity multiple, hold time, what are those kind of 3 to 5 metrics that if you just said, hey, shoot me the deal, and you can just look at it real quick on the OM, where do you feel that market is now between those 4 or 5 metrics?
Yeah, I mean, it depends on the particular submarket itself and the level of risk that we see in that particular submarket. But, from a high level in terms of internal rate of return, what we'd like to see is somewhere in that 15% plus range. And, for the folks that are newer in investing, internal rate of return is really kind of the holy grail in terms of the entirety of that project. And there is a lot of projection included in that number. So that's important to note. So what are our assumptions is a really important key component of internal rate of return. But if we feel very good about our assumptions, our knowledge of that market, and that we're calculating this to a correct degree, we'd like to see somewhere in that 15+% range of an internal rate of return. From an equity multiple standpoint, typically we would like to see a 2x, over a 3 to 5 year hold, and that's for the equity on our project. In terms of cash on cash, of course, this depends on the submarket as well. But typically, we like to see somewhere between 7 and 10%. And one thing I'll say is that, we mentioned earlier, is that liquidity continues to grow in this environment. So demand for opportunities grows as well. And so with that said, we're seeing a slight compression of yields across the landscape. So that's where it is right now, but it may even compress even further as this continues. So that's where it's at right now. But Terrence, did I answer your question?
No, you did. Yeah. No, and market's getting tight. Last couple questions. Hit these quick. So technology, what technology you guys using that you feel like has really changed your business? And then how's your team structured? And then we'll hit our last 2 questions.
Yes. So technologies, first of all, I love technology because it's a leverage point to help us be more effective, right? And so it's not a replacement of relationships, but it allows us to expand through relationships. So a couple of things. So number one, Zoom, right? You and I are having this conversation through Zoom. We're building and strengthening our relationship together. That's a beautiful thing. 2, podcasts. I have a podcast. It's called Elevate Podcast. It's all about mindset, mind expansion, and personal growth for high performing real estate investors. That is another piece of technology where we can scale, and I can scale building relationships and learning and growing through that process, because learning is the most important key component of my growth in real estate. For our team, we use a project management system called Basecamp. It allows us to manage our projects and our teams and different initiatives that we're working on or deals that we're working on. It allows us to contribute and collaborate, whether we're in the office or, virtually. So that's another important piece. For investors, we have, it's called IMS, Investor Management Systems, and that allows people to manage their investments with us. And so this is an opportunity for us to not only streamline communication, but also streamline tax documents, direct deposit cash flow and all this stuff. But those are just a few examples, Terrence.
No, that's good, man. So you suggested, we always have our guests bring one book that they suggest. Why did you bring the book that you brought, and what's the quick synopsis on that?
The book that I would suggest is a book called Never Split the Difference. And that is by Chris Voss. He is a former FBI hostage negotiator. And the reason why this is so important is because negotiation is one of the most, if not the most valuable practice that you can have in the real estate business beyond building relationships, right? Building relationships, let's just assume that that's the most valuable. But when you're negotiating a deal, you can either make or lose hundreds of thousands, if not millions of dollars. So you got to be really in tune with how emotions are played out through negotiation. You've got to understand, how to really gain perspective and how to influence other people through this process. So that book to me is worth millions and millions of dollars. It costs you $14 to go buy it. So that's the book that I suggest that folks dive into.
Sweet, man. Sweet. How can people find you? And then let's plug the podcast real quick, but how can people find you if they're looking for you?
Yeah, absolutely. If they listen to podcasts, of course, an easy way to go check us out is Elevate Podcast with Tyler Chesser. Again, it's all about mindset, mind expansion, and personal growth for high performing real estate investors. So if you want to be even higher performing, it's about a lot of what we talked about today. And it's about diving into a multidisciplinary approach. It's not just about learning about the tactics of real estate. It's about learning about how do I grow and expand as an individual? How do I understand my own psychology? How can I connect the dots of history? How can I connect the dots of economics and all of these different things and matching that together so that while you're patient, you can then take effective action when that opportunity presents itself. And so Elevate Podcast is a great way for people to find me. Also, they can find me if they want to learn more about investing with our company. It's called CF Capital. So you can just go visit us at cfcapllc.com, or you can go check me out at tylerchesser.com or anywhere on social media. I'm all over the place, Terrence.
Love it, bro. Final thoughts, man, you want to leave for our guests, man. It's been a great episode, bro. I really enjoyed it. What's the final thoughts you want to leave for the listeners and the audience?
Terrence, I really enjoyed it too, man. And I'm just so grateful for the beginning stages of our relationship. I look forward to many, many more years of fun conversations just like this, because whether people believe it or not, man, these conversations, this is exactly what we do off camera, right? So it's amazing. Yeah. And one thing I'll just say, and I'll leave with your listeners, is if you believe you can and you believe you can't, you are right? That was Henry Ford, I believe, who said that. And so we've got to check in with what do we believe is possible, whether you're conscious of that or not conscious of that. And so let's check in with your beliefs. Do you believe it's possible to build multiple streams of revenue for yourself? Do you believe it's possible to grow into that individual that you've dreamed of? Because if you do, then it is possible. If you don't, then you might as well not even take any action. So let's check in with that. And I also want to say that just because Terrence has done amazing things in his life doesn't mean that you can't as well. So if you don't believe you can, let's get rid of that immediately. And let's start there and let's build one step at a time. And let's start today. So Terrence, man, that's what I'd leave your listeners with.
Mic drop, bro. Great job, man. Thank you so much, man. I'm like I said, we're gonna keep it going. Stay in contact, and I know we'll be doing a lot of business together in the future, bro. Congrats, man. Great episode, big dog.
Thank you, man. I appreciate you, Terrence.
Yeah, thanks for being on the show.
Thank you for tuning into this week's episode of The Real Estate Entrepreneur with Terrence Murphy. Please subscribe on whichever platform you are listening and consider leaving a 5-star review, as that will help us gain traction and continue to bring you knowledge in the real estate industry. For more content, head over to terrencemurphy.com.